Hello and happy Monday to you. My name is James Boyd. Alongside me is Cameron May, a fellow instructor in the chat. We welcome all of you here today. Hopefully you had a good weekend. My weekend was good until my brother-in-law passed away, and man, that was brutal. So there was good and bad in there. So my plans for this week are a little undefined, as I'm kind of waiting to find out the family situation. But I'll be here, and if I am gone, I'll post on X my plans. So just real quick as we get started, remember with what we discuss here today, we're going to really be talking about examples of using trading with technical indicators. Now, I want to be very specific today. I want to talk about channels with the emphasis on the MACD, okay? And really the focus of what the examples I want to cover are from the Dow. I think it is so crystal clear to see, it's hard not to talk about it. And you'll see what I mean in just a moment. Now, just real quick as we get started, the information here is provided for general informational purposes only. If and when, or if we do, talk about options, remember options carry a high level risk and are not suitable for all investors. Also, when we talk about examples, we will do them on the paper money software application known as the desktop. All investing involves risk, including loss of principal. So as we get started here today, I mentioned we're going to talk about channels. I'm going to show you a couple stocks first, and I just want you to kind of see why are we talking about this. When I pick topics for teaching a class, I always look out in the market and kind of see what is maybe the most evident or maybe the most timely discussion. And I think talking about these channels with an emphasis on the MACD is timely. So first off, let's go ahead here and just take a look at a couple stocks, okay? So what I'm going to do is I'm just going to kind of look at a couple charts. I'm going to start with CM first. And if you don't mind, I'm just going to kind of draw some lines, okay? Now, if you kind of look at CRM, you kind of have maybe at the top end of that, and maybe you kind of have a bottom end. And if you look at that, what you're going to notice is kind of have like a channel trade that is setting up, okay? Now, and a couple examples that I'm going to show you, it's not that you can see the channels. It's, or with any trading or investing in general, it's how are you trading these? What indicators are you using? So when we talk about identifying channels, we're looking at horizontal channels, such as what I'm showing you here, or diagonal channels, both. A lot of the times, though, it'd probably be more horizontal channels than diagonal channels. Now, I'm going to come back to them. I just want to kind of show you a couple things that are doing this. Now, by the way, every stock that I show you in the first couple, they all came from the Dow, okay? So if I pull up a stock like Cisco, and I kind of go back and kind of look at maybe kind of some old levels of resistance, maybe some levels of support, you're going to kind of see that we've kind of chopped our way through that 50-ish level, going to 52. Could you even go higher? And really what you kind of think of this as, just kind of taking levels of resistance, okay? Broke the 50. Now we're at the 52. Can I get a 53? Can I get a 54, right? So kind of smashing through these levels, okay? Amazon. Now, Amazon, we mentioned last week, probably 2 or 3 times. We said this one has a wide channel. Now, this brings up our first major point. If you find a stock that maybe is like Cisco that has a narrower channel versus Amazon that has a wider channel, which one maybe does the investor consider? Many investors might say, James, I'm going to take the wider channel. Why? Well, because the wider channel gives us a wider price target. So trade number one that we're going to do here today, and I'm going to bring up the MACD now, is we're measuring the width of the channel, okay? That width of the channel is about $14.34 or 8%. If we extrapolate that, and that is the word of the day, $14.34, it is going to give us a price projection, and that's exactly what it is. It's not absolute. It's a forecast. It's a projection, okay? Now, if we look at this, we're probably going to get a price target at 203-ish area. Now, I want to kind of now bring in that MACD, and I want you to kind of tell me, what are we seeing on the MACD? Now, we know with the MACD, the moving average convergence divergence, there's 3 main settings. And those settings will really be dependent upon what type of trading do you want to do. So if someone said, James, I want to be like kind of trading faster, or I don't want as much slack in the signal, well, we would be using a 613.9. This is that shortest term setting. It's the most sensitive. Sensitive being good if it's right, but sometimes you might have some early signals as well, which could be bad, okay? So you got to take that with a grain of salt. If you said, I want kind of more the middle of the road, 8-17-9 would be like the middle of the road setting. That's probably more if you're more intermediate, okay? And by the way, when I say intermediate, I'm talking about trading weeks, 2 to 3 weeks to months, okay? Now, I said last week, and I'll say again, we're kind of more days, which would be 2 to 3 days, okay, to 2 to 3 weeks, okay? That's probably a lot of the focus we do in the classes that at least I teach. Now, that doesn't mean that that's for everyone. It's just that that's the classes that I was given that are kind of focusing on that time frame, okay? So when we talk about 2 to 3 days to 2 to 3 weeks trading, we're going to be using that shorter term setting of a 613.9 MACD. Now, if you say, well, James, I know a lot of people that are like this. James, I don't really look at the market that much. I look at the market more on a monthly, quarterly basis. That 12-26-9 for you is probably for you, okay? Now we're talking about months to quarters to years, okay? So I just want to kind of, you define who you are, what you want to do, but I kind of explained to you, we're using this because that's what I teach in my classes. That's what I was asked to do, okay? Now, I want to kind of take a look at, we have the zero line, okay? The first trade that we're going to do is the MACD is above zero, okay? So if the MACD is above zero, we know we have momentum. And the MACD went up, and then it fell back down, did not fall down below the zero, and now the MACD looks like it's going back up again. Now, why is there a lighter color green? Why is there a darker green? Do we know the answer to that? Well, lighter color green just means it's higher today than what it was the previous day. The darker color green, the MACD is still above zero, but it's lower than the previous day. That's why there's a color differential. Now, many technicians, they look for stocks where the MACD is run up and it's pulled back, and where that MACD is staying above zero and maybe turning up again, signifying, we can see that by the MACD going that light green color. Now, what is that kind of telling us? Well, if we look at a chart, it runs up and then it pulls back on the price. But if it doesn't pull back that much and the MACD stays above zero and it turns back up again, this is a candidate for a bull flag and or a breakout trade. Okay? So trade number one. Now, by the way, okay, this is going to be a theme that we see a lot right now in the current market. Trade number one, we're going to do a stock trade. Now, by the way, when we go back to the paper money account, margin account is sitting about 68,000 and a half. Let's see if we can't push it to 70,000 here today. Not today, but maybe this week. Okay. Margin, the IRA, which I'm gonna trade out of both. I just need to kind of tell you where we are. 246 and change. So what we're gonna do is we're gonna buy Amazon in both accounts in the paper money account. Okay. Amazon. Okay. We're gonna go to the trade tab. And this makes sense, right? If we want to do a trade, we're going to go to the trade tab. Stock information up top, options down below. What we're going to do is we're going to right click on the ask price. We're going to go down to where it says buy custom with OCO bracket. So if we're seeing channel trades, right, we're probably going to be using a lot of bracket trades, a target with a stop, initial stop that could be adjusted over time. So now what I'm going to do is, what was that target again? Can anyone remember what that target was? If my memory is right, okay, 203. Let's look and see if we have that. Yeah, it's 203.43. I'm just going to put 203, okay, dated GTC. Now, the stop underneath us, okay, what about the stop underneath us? Well, if we did that, if I go back to kind of where this line was, where's the horizontal line, that breakout level? And I want to use the exact lines we used before to be consistent. 189.59, okay? So 189.59. So A on the chart, we see a breakout. With the breakout, we see a channel. We measured the channel. We added the width of the channel to the resistance. And we're kind of looking at the MACD as kind of maybe an indication indicator that maybe that momentum is not dying off, but maybe it's even going potentially higher. Now, what I'm going to do is I took 189.59, which came from this upper line, set a stop below there, less 2%. It gives us 185.79. Okay? 185.79. So when I put that back on that chart, 185.79. Now, we're going to do this in both accounts here. Okay? So we got a target. There's a stop. We just need now to specify, well, how much could we invest? Well, we said in that IRA, we're willing to invest up to about 8%. We use the same for, let's say, the margin account just for time's sake. It's going to give us about $19,000, okay, for the IRA. I'm just looking at the, it's going to give us about 100 shares for the IRA, okay? So when I bring up this confirm and send box, it's going to say single account. What is 8% of that balance? It's going to get us to about 19,000. So in the IRA, we could really do 102 shares. We're not going to do 102 shares. We're just going to do 100. Now, if we have about $68,500 in the margin account, and let's say we put 6 to 8% capital in there, even if we went 8% capital, it would be $5,400. On a stock that is $192.96, it's going to give us about 28 shares. Okay? Not 289, 28 shares. Okay, so there it is. 28 shares in the margin, 100 shares. Now, if you add them together, that's why it says 128. Entry price, target, stop. Now, remember, just because we have a price set, that doesn't mean that's where the fill is going to be. It could be lower. Okay? You need to really kind of count on that it might even be lower. That's why the position sizing is critical. Okay? Now, and the losses could be more severe. Now, that might not always happen, but sometimes it could. Okay? Send the order. Now it's sitting right there. Now, any questions on that? Okay? So when I looked at the Dow today, and you're going to see on these next couple of examples, it's hard not to see channels. I mean, you almost have to purposely not even want to see them. Now, the other one I'm going to kind of show just briefly is on Chevron. Now, I'm not going to show an example of this in the paper money account, but it does kind of have a channel. And if you go back and really kind of look at this, it kind of has like 148 being like the old floor, if you will, with the next maybe almost triple bottom floor at 152, and then a lot of channel there between 152 and 161. We're not going to choose that because I think energy has been the one that's been trailing. We're not trying to buy the lagging sector. I'm just saying keep an eye on that, because if it does go above 148, 152, if it goes above 152, path of least resistance 161. Now, I want to kind of speak to kind of like why is this of interest in terms of being a trader, okay? And it's really important you understand this of why we're trying to target this. So if an investor, okay, is bearish, their exit might be, okay, if the stock breaks, okay, resistance, okay? Now, from a bullish perspective, if an investor is bullish, their entry could be if the stock, okay, breaks resistance. Now, let's assume that these are stock trades, okay? Now, I might say a terminology that you're not used to. If an investor is bearish and they're short the shares of the stock, how do they exit a bearish trade? Well, they got to buy shares if they are short stock, okay? Now, that's kind of interesting because now it's going to give a potential appearance that there's bullish investors getting in, or that could be that actually bearish investors are getting out because they're now fearful that if we break 148, we could go to 152, we go to 152, we could go all the way to potentially 161, okay? So those bearish investors are trying to get out to avoid steeper losses. Now, if we talk about an investor is bullish and their entry, if they're talking about a stock and it breaks resistance, let's say they're buying shares, they're buying shares. Now, this is kind of what's interesting is with these channel trades, if a bearish investor is short, well, they're buying shares to cover. Or that's one way to exit the position. If we also take a look at, it's the only way if we're talking about stock position on options. If we're talking about an investor who does stock only and they see a breakout and their entry is, and they take that signal, it's breaking out, they buy shares. So you're now getting two things happening. Okay. Now, when I see these channel breakouts, our example that we're going to be looking for is just give us 80% of average volume. Okay. There's a lot of people that says, I don't trade any breakouts unless there's above average volume. I'm not sure how consistent that is, that you're going to always see above average volume. If you get above average volume, I kind of think of that as like icing on the cake and sprinkles. Okay. But as long as we get 80% average volume or better, that signal probably is pretty strong. Okay. Now, if I go back and kind of take a look at this, so I wanted to just kind of bring up this point. This is major. If you understand this, now you're understanding. This is like two people trying to go through the door shoulder to shoulder. And that's why sometimes when we break levels of resistance, sometimes these up moves could be quick and drastic and might not ever even check back. Shorts panic to get out because they don't want to have bigger losses. And those who are trying to get in and trade that breakout, well, the biggest thing is they're trying to hurry and get in and try to get closer to the old resistance, new potential support, and or moving average. Now, the one that we are going to show the example on, and I'm going to go back to this one. Now, this example right here, so our first trade was Amazon. The second trade we're going to look at is going to come from the NASDAQ, okay? Now, this one, what you're going to notice is Fortinet, okay? And if you take a look at this, tell me if you see the channel, yes or no, okay? Well, so if we take a look at this, now what you're going to see is old support, right? Old support, and you're going to see levels of resistance. Now, are we saying that every channel is going to be as wide as Amazon? That is not the case, okay? When you look at Fortinet, the channel width in this case is only a whopping $2.50. So if someone said, James, I'm trading this, I'm trying to trade a channel, but the channel width is not very wide, $2.50, and if I add to the target, it's $79. Noted. So that is a very, very short-term target. However, on Fortinet, what can you also see as well? Now, the reason why we said that we're going to focus on these channels with the emphasis on the MACD, because when you look on the bottom, tell us what you are seeing on the chart, okay? So when this MACD was down at its deepest point, the stock chart was at what has now become the bottom of the channel. When we even went lower than that, the MACD was not as low as we were before. As we tested the bottom of the channel again, well, the MACD was not down as low. Now, what do we call that? Well, if you're going to, now, by the way, I want to kind of same understanding here, okay? When we look at this, and let me just kind of get a different marker here. So if we're below the zero line, it's going to be a red or a burgundy color. Okay, I think we're good on that. The red color just means, yes, we are lower than the zero line. And the red color is saying we are lower than the previous day. Burgundy means, yes, we are below the zero. But for example, we are higher than the previous day. Now, some technicians, they like to look for divergences. 1, 2, 3. Okay? So what we got on the oscillator is we actually see that the MACD is going, well, it's going up, and the stock price until today was kind of zigzagging in this channel. Now wait, if we start to see maybe a divergence down here, what's the chances maybe that Fortinet might go higher? 50-50, 60-40, 70-30? I don't know. I don't know if anyone has a statistical answer. we would just probably say, look, if we're getting a divergence, the chances of a potential breakout to the upside might become higher, okay? Now, we're going to kind of do this in two different ways. We said the channel is a thinner channel, but I think there's kind of something bigger happening here as well. Now, I would kibosh Angelo's comment, ascending triangle too. Oh, I don't know if I could say that. I'll show you some better examples, Angelo, of those. But I think we could probably say there's maybe more of like a bull flag. Now, if we took an extreme reading, okay, extreme reading, we might go from here all the way up here and say, my gosh, there's the pole. That's an extreme measurement, okay? I'm not saying it's not valid. It's just extreme, which means lower probability of it hitting the price target over time. Second, if we kind of said, look, can I take the gap up to kind of where that top of resistance was? So this would be the pole here. This would be that channel flag, okay? So remember I said I'm trying to trade channels, and we're trying to find MACDs where A, the MACD is up and staying up, or the MACD is down and rotating higher as we're in the channel and or breaking out of the channel. Those are the two setups. So what we're going to do, now if we take a look at this, I'm going to even use a little Fibonacci here to kind of get an idea where that maybe price target might try to go to, okay? So if I take a look at this, now I could draw it from the high down to the, let's say, there, okay? And the reason why I'm drawing it from the high down to here, the gap day, is I'm trying to get a guesstimate, where is that 161 extension? So that 161 extension, okay, so remember when we talk about our trades here today, we have two trade setups. Either we're trading the channel breakout when the MACD is high and staying high, that's one, the left turn, or channel where the MACD is rotating and maybe even showing a divergence, okay? This is the second. In this example, we're going to put a price target at 84, and we're going to set a stop at the middle of the channel. Why the middle of the channel? It's because the top of the channel is so close to the actual current price that is probably going to be a really good chance of getting stomped out. So we're trying to give some room. Now, be clear, okay? What is the middle of the channel? Answer, about 75, 78, okay? Now, what I'm going to do is I'm going to go right back to the paper money count for Tenet, okay? Second trade, right-click on the ask price, buy custom. We're going to go with the OCO bracket. When you trade channels, you're going to be using bracket orders a lot, or at least you have the opportunity to if you wanted to. Going to go with OCO bracket. Now, what I'm going to do is I'm going to go back to that, what did we say, 75, right around there, about 75, 71. Let me just get that. 75, 71, the middle of the channel, I might be off by a couple pennies, okay? If I did less 2%, it's going to give us a stop of 74.19. Now, notice we always like to focus on the downside first, okay? We don't talk about pie in the sky, here's what I think it's going to do. We focus on the downside and the risk management / position sizing, okay? Dated GTC, dated GTC. Now, what was that target? Well, 84 bucks. Now, we're going to use both accounts, okay? So when I did the IRA before, we said, look, we could get to work on the IRA about $19,000. On a $77.50 stock, it's about 245 shares of stock if we have a capital size of 19,000. Okay, we'll round down to 200. Okay, single count, multiple counts. Now, I'm going to kind of say something to you real quick, okay? A lot of times people talk about technical indicators, but they don't trade the technical indicators, okay? The way you really get good at something, the way you really prove proficiency is you do the examples. I want you in paper money to practice this. If you just watch someone do it, okay, you maybe absorb 40% of it. If you actually watch it and paper trade alongside with us, I think you could probably get to 60 or 70%. But the thing is, you have to practice alongside with us. These are examples, not recommendations, but we're going to see how they turn out. The IRA, we're going to take 200, okay? In the margin account, we said, look, $68,500 account. Let's say we put 6% capital in, or 8%, I should say. Sorry. That 8% is up to 8%. It's going to be $5,400. $5,400 on a 77.47 stock is going to give us 70 shares of stock. Okay. Now here we go. I'm going to put 70 there. Okay. Now what we're going to do is let's kind of remind ourselves that stop guarantees. You'd like to think that. The stop is a market order. Okay. It's a trigger to sell. We don't know what the sell is going to be for. So first trade we did was Amazon. It was a stock trade. Second trade we actually did, Fortinet, was also a stock trade. Okay. James, why are you focusing so much on stocks right now? There's one clear reason. And it should be so clear it's poking you in the eyes. Well, remember we said last Monday is that we said, hey, if this market goes higher, we're underinvested. Look at the amount of cash we have to capital. Do you realize this account is only about a third of the way invested? Okay. Well, what's the quickest way to soak up some cash? Buy some shares of stock. Okay. Second, if we go to the IRA, we did a better job from last week kind of putting more capital to work in the IRA. We're kind of now just trying to make sure that we stuff some of those trades in paper money in the margin account to get that capital to invested. Okay. Now, are there any questions? Okay. Now, the question from Mal Gator is, well, it's asking Cam, but the question was dumb question. What is meant by MACD divergence? Well, it's really more like a momentum gauge. Moving average, convergence, divergence. Okay. So let's kind of go back to these two charts and let's just kind of show what it's kind of really showing. Okay. So let me ask you that, Mal Gator, what is the MACD showing? If we see, for example, the MACD is down at its deepest point, it's shallower than where it was before and shallower where it was before. Now, let me stop for just a moment. When I say shallower, what do you really mean? Well, what we're doing is we're looking at the lighter red bar and the burgundy bar. That's showing maybe a turn in the MACD, despite that the MACD is down. Same thing. We're looking at the lighter red bar there and the darker red bar there. If we see that this is higher than that, and that is higher than this, that is showing one main thing: increasing momentum. Okay? The end. Should just end the class now. Okay? That's what that's really showing. So it's showing an increasing momentum. Now, if you get an increasing of momentum, what's the chance of the stock could bounce off support? High. What's the chance of the stock could break out of resistance? High. The question now becomes, what have you done to paper trade that? Well, I just sat there and watched it. Now, here's the thing. That's not very helpful, because the whole point is, let me go back to kind of the title slide, okay? Trading with technical indicators, not sitting and watching, okay? Trading, okay? Now, here we go. Okay, a little fun with you there. Now, what I want to do is I want to go to another example. And one example, now the comment from before was ascending triangles. Well, I'm going to kind of, let me kind of just show a couple stocks that kind of might be more ascending triangle-ish. Now, I don't know the exact order, but I'm going to show some that kind of might be kind of more in line with what you're talking about. I think it was Alonzo that showed that. Okay, now let me kind of back this chart off so I can kind of give you a little bit more reference. But let's kind of bring this up. Now, this is more along the lines of what I think it was Alonzo. Okay, and what I'm going to do is, if we said ascending triangle, we're talking about 2 to 3 touches on the top where there's a horizontal resistance. Okay, so there it is, 205-ish. Now, what do you notice on the bottom side? Support. Well, you should be able to see it. Okay, you got a low there. Okay, just recent. Ran up, pulled back, and what do you see? You got a low there, okay? So now when you take a look at this, what do we notice? An upward sloping diagonal line. That is kind of more your classic ascending triangle. Now, let's kind of relate an ascending triangle back to the MACD. What is the MACD showing? Why do we care? Okay, how do we trade with it? Well, if we look at kind of this point, and I'm going to kind of draw down here. Well, if I look at this first time we touched, the MACD was down at its lowest point. Okay, fine. Now, when I look at the second time when the stock pulled back and I look down and say, where was the MACD at this time? Well, let's compare this low, compare it to here. So let's go back to the question that was asked. Why do we care about the MACD? Well, the reason why we care about if we're showing momentum, okay, I said this before, if we're showing that momentum here is turning up, the chances of a bounce becomes higher. The chances of a breakout become higher. Now, one of the questions that gets asked is, hey, should I wait for the horizontal breakout? I'll wait for the horizontal breakout and then I'll get in. Now let's think this through for just a second. Wait, is this an uptrending stock? Yeah. Are we bouncing off the support area / moving average? Yeah. Okay. Does someone have to wait for the horizontal break? They don't have to. They might be saying, look, I'm just trading the trend, buying off support. If someone said, hey, James, I'm going to buy some of the position here, thinking that it's an uptrend above support, and maybe try to add to the breakout, add to the position, I should say, on the breakout. I think that's probably what more investors might consider. Some here, some as it actually confirms on the horizontal breakout. What's kind of a negative of just waiting for the breakout is now you make a full position size trade on the breakout. And so it's kind of like you're buying it elevated off support. That's why some investors like to buy right off support, buy some, and then add to the position. That way you're trying to play the best of both worlds. On support bounce, on the breakout, you're really kind of doing dollar cost averaging. Okay, now, so I think that's a better example of the ascending triangle. Now, that doesn't distort what we just talked about with the MACD at all. Okay, now I want to also go back to, I just want to say something on PayPal. We mentioned this last week. Something going on with PayPal. Okay, we have not seen these type of price moves since COVID. Keep an eye on PayPal. If we talk about another potential ascending triangle that looks exactly like what we just talked about on T-Mobile, well, you get a little horizontal area of resistance, and then you get on the bottom of this, okay, look at these recent pullback area, a recent pullback, okay? Now, I said before, if you said, James, I struggle to see pullbacks, well, you won't now, because if you go back to where it says style, and if you go back to candle to Hakanashi, which it was John Johnson and myself back in probably 2004, 2005. This has been around for 20 years, okay? And John Johnson really liked these, and so we would talk about these 20 years ago, okay? This allows the investor to really see the higher low, and I think that's the real value of these. When you see a red and green candle side by side, okay, potential higher low. Red and green candle side by side, potential higher low. If that is higher than this one, higher low. Where was the last one? All the way down here. Now, the second reason John Johnson, liked the Hakanashi is it kind of took out some of these one-off days, a spinning top day, a doji day, things like that. In other words, you don't really get a down day until you go down for one big day or two down days. So that's why you don't see any red candles in there. Okay, but when you do see red candles, you're seeing more persistent selling, typically a big down day or longer than 2 down days. Okay, now let's kind of go back to that. Hakanashi, let's kind of bring up another example that could be an example of that channel. Now, let me say one more thing because I kind of threw in there Hakanashi, but I should have. If I take a look on the bottom, where's the deepest point, and I look at where we are here, okay, same. We were offline for about 2 minutes. What I was mentioning, so I'm just going to restate this. So we're just kind of back from that little commercial break there, if you will. I was making mention when we talk about what we've been mentioning about these channels or the MACD, whether it's above the zero line or below the zero line, it's not stock specific. It could be used for options, futures, currencies, commodities, anything, okay? It could be used on a daily chart. It could be used on a weekly chart, all the above, okay, which is kind of nice. Now, what I want to do is let's go back to one other example here. So let's kind of take a look at the trades, just kind of sum up so far the trades we have done, okay? So trade number one was Amazon, okay? And the trade number two we actually did was Fortinet, okay? Now, I want to all right, sorry about that. I don't know. My internet's fine because all my numbers are ticking. It might be YouTube, but we're going to go right back to it. Example that we want to finish, okay? And what I want to do is we talked about looking for like an example where the MACD was above zero, okay? Now, look at where the MACD is, okay? Holding above zero, okay? Now, if you're thinking, hey, this stock, Netflix, is above resistance and the MACD is staying above the zero line. What does it tell us, right? If we're going to, for example, get a bounce, some technicians would like to see the MACD stay above the zero line. If that MACD starts to go back up or even stay up, the chances of a bounce is becoming higher and higher and higher. Now, many investors, they like to see earnings maybe in that 3-week window. Why is that? Well, investors start to put trades on now, 3 to 4 weeks out. Not typically. Now, could some investors put trades on 3 to 4 hours prior to the earnings? They could, but a lot of the expectation might have already been done. A lot of traders might have already put those trades on. So when an investor is kind of maybe 3 weeks out, maybe 4, they might be looking for stocks bouncing off support and or breaking out of resistance. Example given our third trade on Netflix. So we see the stock above the resistance and holding that line. The MACD not going down below zero. The MACD doesn't go down below zero and the price holds above 698. We're going to set up a trade where maybe this stock might try to stay above, let's say, the 698 threshold. Now, the first two examples were stock specific, okay? On a bigger dollar stock like this, what I'm going to do is we're going to do a vertical, okay? Now, we know you could do a short put vertical, which tends to be more probability based. Second, we could do a long call vertical, which is more kind of typically more profitability based, less probable, okay? We're going to go to the trade tab, and what I'm going to do is I'm going to go right to that paper money account, I'm on Netflix. Now, we have 25 days remaining, okay? So we first need to kind of make a decision here. Do we plan to hold over the earnings? Kind of depends if, do you want to? Depends on how much of this maximum gain do we have. If we have, our paper money account, 50, 65, 80%, we're not going to hold over the earnings, okay? Going to try to profit take before the earnings. So what I'm going to choose is I'm going to choose an at the money, in the money strike, the 18 October, the 705. Right click, buy, and now what I'm going to do is going to go to vertical. Okay, fine. Now, when I do that, if we were trading in the margin account, we might just choose a $5 wide strike because on that, the debit would be 255 and the max loss there would really, in this case, be 255. Now, we got to ask ourselves the question, how much can we lose on each position? Well, if we could lose, let's say, example given, $500 in the margin, we might just say, look, forget going to 710, let's go to 715. And could we, in that margin account, stand to lose potentially $500-ish bucks? So we're going to widen that strike out. But if we could only risk, say, 250-ish, probably narrow the strikes as I just showed, okay? So what I'm going to do is in the single account, we're going to go to multiple accounts and we're going to do one margin. We're going to do 2 contracts in the IRA. And that buying power effect is really what the maximum loss is given the vertical. Okay? So what we're going to do is, now, by the way, what's the break even? Okay? Well, we have a right to buy the shares at 705. Add the debit, 709.98. That's where that number is coming from. The long strike price plus the debit. Okay? This is looking in aggregate of the 3 total contracts. Note that. So we're going to send the order. Now, you might be thinking, well, we didn't set a stop. We didn't set a target. Well, we're going to watch and kind of see what percent we get. But also, max loss given a vertical is already built into the trade. Okay? Send the order. Now, what I want you to do for homework is I want you to look for stocks that, for example, are showing a pattern where the stock has ran up and the stock is staying above 0. Okay, that's number 1. I want you to find 2 examples of a stock where it's up, stock has recently rallied to the upside, and the MACD is staying above 0. Find 2 examples of those. The second, I want you to find a stock that's in an upward trend above support where you are seeing a bullish divergence on that. Now, as you do this, you're probably going to see channels. So I want you to practice those channel trades with the emphasis on using a MACD with a setting for our example of 613.9. Okay, now I'm out of my time here today. I want to thank you so much for your comments. We had 2 little station identification breaks there. Thank you for your patience. Thank you, Cam, as well. Now, if you said, hey, where could you actually find the YouTube channel right on the internet? Or if you went to YouTube in general, you could just type in Trader Talk Schwab Coaching Webcast right in a search bar on YouTube. Or you could just click on the link that I sent. Feel free to subscribe to that channel. That way you can see all of our upcoming content and record it. Now, as you subscribe, you could also click on that search icon right there, and you could search for any topics, okay, on our channel right where my finger is. So if you said, I'd like to learn more about options or stock trading or price patterns, as you have subscribed, just click on that right there. You could search for anything on our channel that we've talked about, okay, which is kind of nice. Now, also, I want to give us a quick reminder that when we go to the schwab.com page, you can also go to Schwab Coaching. And this is going to really be showing us, let me send this to you, okay, right there. Well, you can go down to the live webcasts and virtual workshops right there, and you can now see a page, a calendar of all of our classes coming up today and going into the future, and the workshops as well. So you'll see that we have coming up next, Michael Fairborn, Getting Started with Thinkorswim, Mr. Cameron May coming up next, and so on. So stay tuned for that. Make sure that you recognize that these are live and recorded. Anything that is ETFs is not recorded, though, okay? So I want to make sure you know of our schedule. Now, remember, with what we talked about here today, we talked about channels, and we talked about that focus on the MACD as a trigger for those potential entries and identifying the bullish momentum. Remember, what we talked about here today was done for example, illustrative purposes only. This has been the class on trading with technical indicators with that focus on the MACD. So with that said, stay tuned for Michael Fairborn coming up next. Thank you so much. Take care. Bye-bye.